Welcome back to The Explainer. Today, we're unpacking a series of massive, multi-billion-dollar shifts that hit the financial sector in just one single week. Look, if you were distracted by all the World Cup quarterfinal arguments in your group chats, you might have totally missed that the fintech world absolutely did not take the day off. On July 7th, three major players made some huge moves that are literally redefining how financial companies scale. We're talking about aggressive expansion through licensing, massive cross-border acquisitions, and snapping up AI infrastructure.
Okay, let's dive right into this. Our roadmap for today is pretty straightforward. First up, the growth playbook. Second, we'll look at Coinbase and the licensing route. Third, Equifax's geographic expansion. Fourth, we'll cover Axos and their AI acquisition. And finally, number 5, the big takeaway. We're looking at 3 totally distinct corporate strategies that are absolutely shaping how you'll eventually manage your own money.
All right, part 1, the growth playbook, unlocking new paths to scale. Now, for today's fintech giants, sitting around and waiting for organic growth, yeah, that's simply not an option anymore. I want to kick things off with this brilliant quote from our source material because it just perfectly sets the stage for the market moves we saw on July 7th. It says that the fastest way to grow is to either unlock a new door, buy the neighbor's house, or copy your rival's homework. And this isn't just some abstract theory. This is the exact playbook we watched 3 major financial institutions execute in real time. Moving to part 2, Coinbase and the licensing route, or basically, building the Costco of finance.
So our first case study is this perfect example of unlocking a new door. What's genuinely fascinating here is how Coinbase is meticulously stacking up its permissions. On July 7th, they secured a massive UK investment services authorization from the FCA, what's known as a MiFID license. Now they're stacking this right on top of Step 1, their e-money authorization, and Step 2, their crypto registration. That's 3 separate heavy-duty permission types all sitting under one roof. So what does this actually mean for you and the market? Well, it means UK retail users can trade equities on Coinbase for the very first time, while institutional traders get to play with crypto, equity, and commodity perpetual futures.
And honestly, this perfectly highlights why getting this specific license is definitely not just some boring regulatory update. Right now, Coinbase gets to operate fully inside the regulated perimeter. Meanwhile, practically every other crypto exchange in Britain, they're stuck waiting in line for the UK's new crypto regime, which doesn't even kick in until October 2027. It's like Coinbase just slipped through the side door of an exclusive club 15 months early, while their competitors are literally stuck out on the sidewalk checking IDs. They're building the Costco of financial products, just one license at a time. All right, on to part 3, Equifax and geographic expansion. A $750 million bet on Mexico. This right here is the equivalent of buying the neighbor's house. On that exact same day, July 7th, Equifax inked a definitive agreement to buy Mexico's fastest-growing credit bureau, Círculo de Crédito. This isn't their first rodeo either. This is Equifax's 17th acquisition in just 6 years, pushing their total deal spending toward the $5 billion mark. And let's be clear, they didn't just buy some scrappy little startup. They bought a highly profitable powerhouse. We're talking $134 million in trailing 12-month revenue, a 31% year-over-year growth rate, and $62 million in adjusted EBITDA. Plus, they've got a massive reach of 2 billion trade lines across 80 million identities. But here is the absolutely crucial number you need to know, 44%. That is the chunk of the population in Mexico that still doesn't even have a bank account. Equifax essentially just dropped $750 million to bet that Mexico's credit market is mirroring exactly where the U.S. market was a decade ago. Underbanked, underscarred, and totally ripe for new infrastructure. They're basically buying the best expansion team before the credit data gold rush really floods the league. Which brings us to part 4, Axos and the AI acquisition. This is all about following the leader. So this is where we see that strategy of copying your rival's homework in action. Axos Financial is a bank sitting on a hefty $29 billion in assets. And wouldn't you know it, on July 7th, they agreed to acquire Arc Technologies, which is this AI-native cash management platform backed by Y Combinator and Bain Capital Ventures. But the real prize here, it's Archie. Archie is an AI agent that automates all that heavy CFO-style finance work. We're talking treasury management and debt access, but without totally burning out your finance team. Axos is snapping up this AI sidekick because they know, for sure, that buying AI infrastructure right now is significantly faster than trying to build it from scratch. But what's truly fascinating? The timing. Just about 3 months ago, Capital One dropped $5 billion to acquire Brex. Now, Axos is running the exact same play, just on a slightly smaller scale. So within a single year, we've watched two chartered banks literally buy their way into the AI fintech lane. It's exactly like watching a sports franchise win a championship by making a massive superstar trade, and immediately, every other team in the league calls up that same sports agent. When Capital One and Axos run the exact same play 3 months apart, yeah, that's not a coincidence. We're watching a brand new category form in real time. And that brings us to part 5, the big takeaway, or what I like to think of as the coordinated race. Let's pull the lens back for a second and look at the big picture here. So let's review today's stack. We have Coinbase executing growth by authorization, effectively unlocking a brand new product line. Then we've got Equifax pursuing growth by geographic acquisition, quite literally buying their way into an underbanked market. And finally, we have Axos driving growth by AI adoption, borrowing a strategy that's already proven to work for the bigger players. These are 3 entirely different paths, taken by 3 very different companies, all on the exact same day. But you know what? They all lead to the exact same destination, hyper-aggressive growth. They're expanding by license, by acquisition, and by AI. The one thing they are absolutely not doing is just waiting around. Which really leaves us with one final big question. Is your primary bank building the future, or are they just standing around waiting in line? It really makes you wonder how your own financial apps are strategizing behind the scenes right now, doesn't it? Look, if this explainer helped you see the financial landscape a bit differently today, be sure to share it with a coworker, especially the one who still thinks Venmo and fintech are the exact same thing. Thanks so much for joining me on The Explainer today, and keep learning.